Well, good evening, everyone. Welcome back to the channel. So, unfortunately, I have a bit of a downer of a video tonight, but things that all need to be discussed. So, we need to talk about what has been driving this historic market downturn, and it has more to do with things we may not be immediately focused on. But really, it's been bit of a delay here since I've churned out a video because a lot's been going on. For those of you that read my post that I made, I've actually accepted a new job, so that's exciting, but could impact the amount of videos I'm able to put out. I'm trying to work on some more edited videos, and the team I've been using to edit videos, which has done a great job. I'm going to try to ramp it up, and I've been, working towards a deal with them to ramp up to possibly 4 videos per month. But with all of that being said, most of us probably think that the market dropped last week because of the Fed's announcement on the Fed rate hike, but really it was less than expected because many people were expecting a full percentage point hike, but it only came in at 0.75%. But then the market, even though it was rallying right before Fed Chairman Powell started speaking, it started dropping right after we got the announcement of a lesser than expected rate hike. So that probably seems confusing and goes in line with the market as a whole this year because we've seen a lot of just mind-numbing, confounding behaviors of the market. But if we look back, so we had a mini rally from like June to August, and then we've just free fallen from there. Um, Not to quote the Tom Petty song, but not as fun as that. But it has been a free fall. So this is looking at the futures tomorrow. You can see I just went into detail here. This is the Bollinger Band here in dark yellow, which is pretty wide because of the wide spread. But I won't get into those details here. Actually, just accidentally clicked on that. But what I want to show. So yeah, the futures are down, but actually they came back just a little bit since I started the video. They were down over 100. Now they're down 83. But looking back over the last 6 months here, you can see from August 18th, really just over a month ago, to last Friday, we've fallen we've fallen over 4,000 points, which is just mind blowing, mind boggling. And falling below 30,000, that was really a key support point that we fell below, which could signal the market's going to potentially drop even further. Let's look at the S&P real quick. And same thing again, we were at 4,300, but we're inching close to the doorstep of 3,600, which many experts believe that if we breach the 3,600 support level, we could drop a lot further. NASDAQ, of course, is having a historic bloodbath. We started the year at 16.5 almost, and we've lost over 5,000 points in the NASDAQ. So I believe the NASDAQ's down the most of all the indexes. Russell 2000, which we don't pay attention to as much, has dropped also. Most interestingly, crude oil has dropped to $78 a barrel, but we're not really seeing that reflected at the pump, not too much. Gas prices have fallen, but probably not as much. And of course, there's a major hurricane getting ready to impact the west coast of Florida. So that will probably be a good excuse to raise gas prices again. But we'll see. But what I want to discuss, what's really driving the markets, and I haven't discussed this probably in 6 months, is the Russia-Ukraine situation. And we had some pretty concerning news last week. So those of you that have been following, as you know, this is the territory of Ukraine that Russia has taken control of. And there's been several significant Ukrainian counteroffensives, of course, backed by the U.S., because we're financing and supporting Ukraine pretty significantly. But what's happened, the Russian military and Russian President Vladimir Putin are getting desperate with these counteroffensives because they're actually getting beaten. And now he's actually threatening the West with nuclear war. So he's claiming what you see here in red, the newly acquired Russian territories. He's now claiming that this is part of Russia, and that if the coalitions backed by the West and NATO go into these territories, he considers it an invasion of Russia, which warrants a nuclear response, which is pretty scary. And let's look at, because I think a lot of people don't know this, but there's a website here, fas.org, And this is actually the nuclear arsenal of Russia versus the United States. So, and I didn't even realize this, but Russia actually has more nukes than we do. So a nuclear exchange would not be a fun, or beneficial thing to get into. And, we all certainly hope and pray that that doesn't happen. But, once this kind of started getting picked up by the markets last week, the markets really started tanking. So there's a lot of stuff happening in the world all at once, major confluence of events here. I mean, um, and it seems to be accelerating. But that's what we're looking at here. And these territories, actually, Russia's holding referendums within these territories where they're like declaring their independence from Ukraine or their allegiance to Russia. So we'll see what happens. Hopefully, worst case scenario, they can negotiate a settlement or something. But overall, if you look at the map back from like March 5th, this was the first Russian. I don't want to go here. It's not going to pull up the map. I'll just stay here. This was the territories you see here in red. This was like the first like Russian invasion, and this is how much they took, like at the highest extent. And of course, the Ukrainian military, backed by the West and NATO, has actually pushed the Russians back significantly. So they're at the point of desperation at this point, and that's what we're looking at. Of course, we had the Fed rate hike. We had major hurricane getting ready to impact the Southeast. Oil prices dropping, which can be a good thing, but really, some people would ask, well, with all this stuff going on in the world, is this still, a good time to invest? And of course, I mean, if you're, living and breathing, I think any time is a good time to invest. Does it look good? No, certainly not. But remember the concept of dollar cost averaging. You invest no matter what the market is doing. So you're putting dollars in and you're cost averaging regardless of what the market is doing. And really, when you're buying in at lower valuations, the upside is higher. So if you take a stock like, just say like Walmart, say it's at like $150 a share, and if it falls 50% and it drops to $100 a share, then you can buy in at $100 a share. And then say the intrinsic value of that is, say it's going to get back in 2 years to where it was, which tends to happen, especially over the last 10 to 15 years. Stocks tend to get back to their high points, especially with Fed policy and whatnot, because we do know once the Fed raises rates to a point of no return where we really start tanking, the Fed's going to reverse policy. And within a year, we could be looking at the Fed cutting rates. So when that happens, the market should come right back up. So like I'm saying in this example of like Walmart stock, you buy in at $100 a share, and then you get up to 150. So you immediately get 50% upside because of buying in dollar cost averaging at a lower price, right? But with dollar cost averaging, you would buy in constantly regardless. So you may buy in once a quarter. So say Walmart goes up to like 110 or 115 or 120, you still keep buying in. So you're averaging in, which actually helps you hedge your risk, and you're spreading your average cost out over different points of pricing of the stock or the ETF or whatever it is you're investing in. So with that being said, that's really a quick market update there. It looks like it's going to continue to be rough next week. Like I said, all the futures are down, and just wanted to shed some light there on what's going on, because I think that we're not seeing too much coverage about the Russia and Ukraine situation, but it does impact the world, of course, and the markets. So hopefully a good resolution can be arrived at, and hopefully the Fed doesn't raise rates too much longer, and hopefully we can get back to prosperous investing times, right? So with all that being said, hope you enjoyed that as much as possible. Please remember to like, comment, and subscribe. Keep an eye out for my future videos. Thanks so much. Take care. Bye.